Hey, founders, Kirk Michie here. We've gotten some great questions over the last weeks and months, especially with tariff uncertainty, some of the slowing of M&A activity here in 2025, while in other areas it's still accelerating. Founders are asking us whether they can sell their businesses while the results are down or flat, kind of year over year, or maybe even on a trend that's down. And the answer is yes, definitely. Now, it'd be wrong to go into that transaction thinking that you're going to be able to get the buyer to kind of recognize that even though the transferable economics, whether they're valuing that on your revenue or your EBITDA, are going to go up in the future, so they should pay you some of how much they're going to go up in the future, that's not going to happen. So stop even thinking about that. But there is a way, if you can find the right buyer or buyers, whether it's through some competitive tension between groups that might have a good reason to want to buy your company or value your economics and think about how much more they could add to their company. If you do the right job there, then while valuation might be as high as it would be if your results were trending up and to the right, there might be a valuation at which you'd be willing to transact. So I think the thing to do here, the thing to kind of recognize is that you still need to professionalize your financials. You still need to protect your intellectual property. You still need to think through trying to create that competitive tension, whether it's by hiring an advisor or trying to do it yourself. But if your results are down, don't shy away from it. Be clear about why they've been down and think about which buyers and how much more they could get out of you. So for instance, let's say you're in manufactured products of some sort, and there's a bigger entity that might buy you and save on some of the distribution costs or reduce your cost of goods sold because they can use suppliers that will cost less no matter where they are. Okay, so there's a natural story there. Or your economics can move into a larger entity, and let's say you would be trading at 4 to 6 times EBITDA, but that larger entity might be trading at 10 or 12 times EBITDA, so they get an immediate lift. It's worth highlighting that in discussion with them. If your business is truly distressed, then it's trickier, all right? You probably want to find a competitor, or you're going to sell the business for the value of its assets. And if you've got debt against the business and you're left without that many options, negotiating with your creditors is obviously one piece of this. The other thing is finding another source of strategic debt, if you will. Maybe, a private credit firm that might take some of the equity for the upside. The terms might be kind of onerous, but it might allow you to restructure and keep a bunch of your key employees and grow the business for an exit down the line. So anyway, the bottom line here is, even if your business is down, even if your financial results don't reflect the potential of your business, there's still the possibility to create a sale. You just have to get a bit more reasonable, a bit more creative, and then still do all the things you need to do to create that competitive process and draw the spotlight onto the most attractive parts of your business. Thanks. More soon.